So we have just wrapped up talking about the UGSG funds. I guess the 212 pies is probably a better way to talk about it. But now, literally right off the bat of that, I'm going to go through my entire portfolio. The only interesting thing is I'm not going to put up the numbers for my lifetime ISA for my pension, because those two, there's no easy way. I mean, I can get a statement up, but if I go onto the website, it's got like my account number and all my personal details, and I can't bother to like edit everything out. So just take my word for it. I've got £750 in my pension that I can't touch until I'm 55 or so. I've got, at this point, I've got £1,516, I think, in my lifetime ISA, which is spread between 4 different funds. I've got my global AJ Bell Global Growth Fund. I've got Legal and General Future World ESG something fund. I've got 2 Vanguard funds, 2 ESG Vanguard funds. One of them is emerging markets, one of them is developed world. All of these, well, not all 4 of them. The final 3, the ESG ones, those are all accumulating, not distributing. So what that means is that when my dividends are paid, they just pay it back into the fund. It accumulates over time instead of being distributed back out to me. So even though I can't touch those dividends, it's way better to accumulate them in that fund and make more and more money from that. So pat me on the back for knowing what accumulating means, basically. Shout out to the helicopter flying over me right now. But anyway, yeah, as I said, I'm not going to talk about those two. Actually, the money that I do have my pension, that's with Legal and General, and I think that's also a global growth, like an 20%, 80% stocks, 20% bonds or cash or whatever invested. So that's actually pretty cool as well. But yeah, I'm not going to go into that in more depth. Because as I said, there's no easy way for me to get it without showing all my personal details, and I can't bother to edit that later, so just take my word for it. The only one other thing, can I not do that? The only one other thing is my startup, investments that I put into Moneybox, £350, and Free Trade was £500 that I've mentioned in my portfolio in my net worth video, which I'm also not going to show because there's no easy way to not do that one either. Whenever I go into that, it's got like my tax write-off information and this and that and all this other stuff. So yeah, we're just not gonna do that. But we are gonna go through my my individual investments. My stocks that I hold for myself, the ones that I kind of did the more research on, because I didn't really research the global growth fund. I just put it in there. The pension was kind of like set by the university, my previous employer, so I didn't really get to choose that one either. But these are ones that I've done my own research on. I will at some point talk about my fundamental analysis either on this channel or much more likely on the Patreon page, because since no one's paying for that content, I can afford to get away with nonsense for now. But yeah, if you do want to know more about any specific stock, do let me know. But otherwise, I'm not a financial advisor. This isn't financial advice. I'm just kind of showing you what I've got for fun. And yeah, let's get it. I'm literally about to start screen recording here. So yeah, let's go. First of all, I'm going to show you my investments on Free Trade, because I started using Free Trade first. And also I just like the user interface on the app much more anyway. As you can see from the very top here, I'm up. See, this says I'm up by £631.82 since I began investing, but then it says my account balance is £164.75. I don't know why they haven't fixed that, so I can see a more accurate like standing of my account. But basically, I invested way more between early 2020, like between January and April. That's when everything was going down. Well, to be fair, Jan to March was normal, but it was like March and April where the lockdowns happened in the UK and like across America. So that's when I started putting like big money in there. I think at most I had about £3,000 in this account, and it's come right down, because again, if you watched my why I stopped investing video, you can hear I talked about my lack of emergency fund, having to like pay for car repairs and rent and blah blah blah. I didn't really account for that at the time, so now it's a lot more manageable and realistic based on the fact that I don't earn any money. But yeah, £164 and counting. What was it? So it peaked at 173 ish, but then it had a massive dip obviously last week beforehand. That's because I'm quite heavily invested in tech. Actually, that's not even true in this one, but we'll go through it now anyway, just so you can see what I've got. My 3 biggest holdings, well, my 2 biggest are probably the most interesting, is FTSE 250 and S&P 500. Those are literally both just index funds, and the reason why they're so heavily weighted in my portfolio is because I bought them at the beginning and I just never sold them, because it's not like they're seeing like tremendous growth. Like Tesla was like way up. I bought it at like $400 pre-split, and And obviously it went up to like 2,000, then it split now to like 400, then it went straight back up to 800, wherever it is now. So I've made some ridiculous growth on Tesla, and because that one's been going up, I've been peeling it back and taking some profits away from it. I don't even know if I have any left. I've got £4.47 left, so I've sold off pretty much all of my Tesla. Because when I first got free trade, I couldn't even buy fractional shares, so I had to pay like £400 up front for one entire Tesla stock. And then eventually that became 5 when it was a split and I started selling. So it was very interesting times. I've made a lot of money from Tesla, so shout out Elon Musk for that. But yeah, the FTSE 250 and the SP 500 are my two biggest holdings because, as you can see, yes, you know, they're up 9.3% and 23.32%, not respectively, they're the opposite respectively, so I went backwards. But it's not like 100% growth that I got from Tesla, so I can start peeling away from it. It's a bit more modest. Maybe I might take some money away from the FTSE 250, but even in saying that, it's only like £34. It's not like I'm taking a lot. If I got to pay rent, I'm not going to take £34 out of this. I'll probably take from my savings accounts or from anywhere else, basically. So that's why that's the biggest holdings. Not because I believe in the index funds more than anything else, even though they are the most stable. I'm very growth orientated, right? I need to get that word right because I keep getting it wrong on YouTube. I'm very growth oriented, so at some point I will actually sell this off and rejiggle a little bit. But yeah, good money. Square, I've mentioned several times. I've got a video about it as well. Apple, surprisingly, is down. Oh yeah, because I until recently I was buying in. You know, I was cost averaging, so I put like £10 in a month for a week or whatever. So even though my Apple is up from the last time I put money into it, it's overall down because I put a lot in when it was like sky high and it crashed and it hasn't really reached those highs. MSCI UK Social Responsibility, that's a ESG fund. It's annoying because if I go into it now, you can see it says plus on the side, which means that I can't buy in again until I get a Future Plus account, which is like ridiculous. Let me actually go and check. Can I check it from here directly? If I press plus, nothing happens. If I press upgrade to plus, here you go. It's £10 a month, £9.99 a month. And even though I can get 3% interest on balances up to £4,000 in cash, if you run that maths back, right? So £4,000. Let's say I got £4,000 in cash there the whole 12 months. 3% interest, you know, divide that by 100, that's £40, that's 1%. Times by 3, £120, that's 3%. If I put £4,000 in there and I leave it there for the whole year, I'm going to get £120 in interest. However, the account costs £10 a month, so I'm going to be paying £120 in fees. So what's like, okay, if I keep £4,000 in there for the whole time in cash, then it does work out. It balances out, and I don't pay anything. But what the hell have I got £4,000 just to sit in an account for? Especially this one of all accounts, I'd rather put that in another account, getting 1% interest, where I'm not paying for, and then I'll actually make money from it. Or more simply, I'll just invest it. You know, I'll put that £4,000 into investments, or just into my emergency fund that I don't have. So yeah, no, really quite annoying. I wanted to put way more money into this social responsibility. Socially responsible money. I want to invest more into ESG firms with ESG focus, but a lot of them are just plus. A lot of them I can't get into anymore because free trade just need to make money. So I understand, but it's a bit annoying. So there's that. I've also got global clean energy and digitalization. iShares. I didn't actually realize that iShares are the biggest fund management, not in the world, in the UK. I think one of the biggest ETF and fund accounts. Distributors or whatever. I've got to read more into iShares as a company, to be fair, but they seem pretty cool. And these two funds are both ones that are quite ESG heavy, quite sustainability focused. So I thought, yeah, I'll put money in there. They're both ETFs, so they're both quite well balanced, but quite safe relative to like Bitcoin or something. So yeah, there's that. Vietnam Enterprise. My friend worked at Jefferies. He's like, yeah, you know, I'm half Vietnamese. Well, he's not half Vietnamese. He's fully Vietnamese. My friend's Vietnamese. He worked at Jefferies, like the company, the bank, the financial services company. And he's like, yeah, we manage his stocks. I'm like, okay, screw it. Let me just put some money in. Just not even in an insider trade type of way. He didn't tell me anything about it. Just that he's like, oh yeah, did you know we have this? I was like, yeah, screw it. Let me just go for it. I'm a strong believer in the emerging market sector. I feel like there's a lot of money to come from like Asia and Africa that we haven't really thought about yet because most of the UK are just racist. So I don't think they realise the potential in some of these emerging markets. So that the world outside of the West is actually very, very like. I haven't been to Singapore. Like it's crazy out there. You know, I've been around a little bit, not as much as I'd like to, but I've been around a bit. I've done my research. The world is pretty magnificent, and I do feel like some of these, you know, previously poorer areas are gonna even if they're still poor today, if they just come up to just where we are, that's still a massive jump, let alone like where they was going to be in 10 years time. So that's my thought process. I should do more research, but I haven't. Dot Digital, they're like a online digital marketing type of firm. Scottish American, I think I have that in one of my in the funds as well. I think I just saw it. Tesla, of course, is way down now. Xpeng, oh my gosh, minus 33%. This is why I don't put more money into like Xpeng Neo. I'm trying to balance my risk to my because I've got a relatively low risk tolerance right now when I've got no emergency fund, so I'm trying to be a bit more balanced. That's why Xpeng is only £3 invested. I think I put £5 in. Obviously Costco, Pineapple Power, Nvidia. I was going to put more in, but they're in the pie, the 212 pie, the UGSG pie, so I don't really care much about it. Pineapple Power is a SPAC. I don't actually. This is the first. I kind of feel like an idiot for buying it because I just thought, you know what? It's got a pineapple in the picture, and I've got like £3 extra in my account that I don't know what to put into, so I just threw it into that. It's gone down. I don't really care. It's £3. It's not going to hurt me. Is it £3? £2.99. So for 31 shares. If it does well, it does well. If it doesn't do well, I lose £3. I don't care about that one. So it's not the best financial decision I made, but I made the decision. It's in my portfolio now. So yeah, Costco is actually really down. I don't like that. Maybe I might have to rethink about Costco being in my portfolio. But otherwise, that's free trade in a nutshell. As I mentioned, I'm not going to buy any more stocks in the previous video. I'm not going to be buying stuff for my own personal holdings. So this is going to stay the way it is for a while. However, I will put the link in the description below if you do want to make accounts for free trade, because I think 212 have halted new members, like there's a waiting list now. But as far as I know, 212 free trade is still accepted to people. So I'll put the link down below for that in the description if you want it. If you do follow my link, you will get a free share worth between £3 and £200. I can invite as many friends as I like. And I'll also get a share, and I have no active referrals. So I'll put a link in the description below if you want to do that. Hopefully you guys, people get good shares from that if they decide to do it in the end, but otherwise, yeah, that's up to you guys. The second app I'm going to go into now is Trading 212. So a lot of this will be familiar if you saw my previous video talking about the two funds that I made, the two pies that I made. I got to get used to saying that, which is quite an annoying feature, because if I go into the pies, I can click on individual pies, see what I'm holding in there, but what I want from the investment page is my investments, not including the pies, since there's a separate pie tab anyway. So it's a bit messy. It's kind of annoying, but I know what's what, so I can talk to you about my individual holdings anyway. Plus, if I go onto the previous page, I've got a page somewhere, yeah, current. So I've got a page of all the current, because when you go on this is kind of like this beef in 212 for no reason, but when you go into the app, yes, you can go into like AMD and you can go into the chart directly through here. But to be fair, this is more so because of the website. But anyway, you can go to the chart directly through your investment page. But I don't know. I like how it looks more on the home page. I keep wanting to show you with my phone, but it's going to be on the recording anyway. So it's like here I can actually see and compare them in real time. Even though again on the investment page you can still do that. I just prefer doing it this way. So whenever I bought stocks in the past, I would add it to my own watch list. And this is that. So this is the easiest way for me. You know, in hindsight, this wasn't the plan initially, but it does allow me to see my investments instead of, my entire portfolio on 212. So going back to the top here, SNDL, Sundial Growers, that's a weed stock. I put £1, £2 in it because I had money to spare. I think I sold off some of my PayPal investment and I put it into SNDL. So that's why that's there. PayPal, I've only got £5.12. So my total, you can see my total here is £721 in my portfolio, which is £685 invested. However, 600 of that is invested through the UGSG fund. The two pies that I mentioned in the previous video. So the remaining £85 is my own money. So when I'm talking about all of these different stocks that I own, the total that I own between them is £85 of my own cash, of course, excluding what has grown or shrunk since I invested into it. But that's just, something to think about. Like, I'm not just balling out here, flexing or nothing. But yeah, PayPal I've got, Beyond Meat I've got like £2 in there, £1.19 even, not even £2. And that's up 12%, which is quite cool. Peloton Interactive, I've got £2 in there again. That is way down since I bought in. I bought in at $166 because I was kind of banking on To be fair, maybe this is actually, now that I think about it, this is not the greatest investment right now. It would have made sense earlier, but right now it's probably not the best investment in based on my own intuition in the last 2 seconds. But yeah, I might have to think about that one again. It's only £2, I don't really care. But yeah, Zendesk probably got £5, £4.70 in Zendesk, which is pretty cool. Etsy, I've got 608. That's more than I thought I had in Etsy. I like Etsy though. Etsy, I expect that to maybe not 10x, but like 2x. Yeah, I'm a fan of Etsy, Wayfair, and Zendesk. Zendesk is like a customer service platform, so a lot of these like online sites, it's difficult to manage customers yourself, so they just use companies like Zendesk or others to outsource their customer service help desk and stuff like that. So that's why I put them in there. Etsy, I'm not going to explain any of these more in much more depth, but yeah, there's that. CD Projekt Red. That's one that is annoying because I'm a at heart, I'm a big gamer. I really wanted to see Cyberpunk do really well. Obviously, it didn't. And then as a result of them not doing too well, the stock took a massive hit. So I thought, you know what? At some point, they have to just update the game. They'll patch it. They'll put out the next gen versions on the PS5, Xbox Series X and S, and then at that point, it'll go back up, right? It takes a little while longer to to develop software. So I've recently learned. So that's down 20%. Again, it's only £3.94 invested, so I don't really care that much. But that was a speculative bet. Didn't pay off at all. However, one gem I can say in this video, 60 minutes in, is that you only lose when you sell. You only win when you sell as well. But I can hold on to this for as long as I can keep this £4 invested in CD Projekt Red for as long as I need to, until I see a green. If I ever see a green, I might not, but then I only lose £4. So I don't really care fundamentally. Let's go to the next one. Yeah, but anyway, yeah, I do hope for the best. I haven't actually bought Cyberpunk yet, so maybe I should buy that just as like an insider trade or something. But yeah, hoping for the best there. I don't want to see any company go under. That's millions, not millions, but there's jobs lost, there's people's hearts broken. So hoping for the best either way. Cheesecake Factory is way up, 76%. 76%, almost doubled. I should have put my car in. I should have put way more money into Cheesecake Factory. They've had a great year, and I believe they're going to have an even better future. I'm not selling any of that. Shout out to Cheesecake Factory. Neo, again, mentioned. These bottom three are my biggest holdings by a long shot, because I've got £10 in the Invesco SP500 high div low yield. I've got high dividend low volatility. I've got £8 and 8 pence in Investco EQQ Nasdaq 100, and I've got 27. I thought I had way more. 20. So basically £28 invested in the Vanguard FTSE All World high dividend low volatility shares. These three, well, to be fair, EQQQ. Actually, I should really look into this some more. Because I didn't really do enough research at the time. I did what I thought was enough research, but that's before I kind of knew what I was doing. And EQQQ is basically like a fund of the Nasdaq is like all the tech, the biggest big tech companies. So the EQQQ is basically just all the it's the biggest. It's a massive tech weighting, and they were doing really well at the start of last year. Obviously because of like the pandemic. But I didn't actually buy in at the start, did I? Apparently I didn't buy in until, well, this line isn't very accurate, so I can't actually see what point I bought in. Okay, here. So I spent £5 on October 8th, and then what does filled mean? Oh, they filled the request. So I sold £2.60 on October 20th, and then I bought. Okay, so I wanted to buy £2.60 of it, but I think I pressed sell by accident, so I had to buy it back in immediately. And then I got a 1p dividend, which is pretty cool in December. So it's a bit of a strange one, but yeah, that's just a big tech stock, a big tech fund. So I thought, yeah, I need to buy into that. The S&P 500 high dividend, low volatility, and the FTSE All World high div, low vol. I don't know why. My mentality at the time when I first bought into them was like, yes, obviously I want to maximize my growth, but at the same time, I don't have enough money to. This is kind of like my compromise to hold an emergency fund, because I was like, obviously you only make the money when you sell the stock. However, with dividends, you get income, right? So I was like, okay, cool. I'll balance it so it's like some amount of money is in high growth stocks, and then the majority, at least for the time being, will be in dividend stocks. So then I can keep. And so that way I can put as much as possible in there and then make the money back in dividend. Not all of it back, obviously, but make some sort of income in dividends. That will keep me afloat in the short term. and hopefully it was a way to circumvent having an emergency fund. However, what I didn't account for was that even if it's like 80, even if it's 100% dividend return rate every year or every quarter, I've only invested like 20 quid, so I'm not going to be seeing like big returns. It's like 0.63 of a share. So if they gave me, I don't know, I don't know. But let's say it was like 25p per share, which is actually pretty high rate. I would only get 12p, 12 and a half, well, like maybe like 14 pence per share that I hold, because I don't hold a full share. And yes, there is some income. It's better than nothing, but it's by no means a compromise for like a £3,000 emergency fund to pay for like anything else in the short term. So it's a terrible idea. It does make sense in the long run. Like eventually I will want to hold more dividend stocks. I actually am planning to do a video about it soon, why I don't buy any more dividend stocks, but I'm not investing right now, so it's not really important. But eventually I do want to hold more, because that is a means of income, and maybe every month I'll get, if I balance my portfolio well enough, I can get like monthly, if not probably even daily income. Actually, I say that there is actually a pie on 212 called Almost Daily Dividends by the Dividend Experiment. I've got to check that one out. You guys should also check that one out if you're interested. Don't buy into it based on what I say, but do check it out if interested. But yeah, eventually I will hold dividend stocks as a form of income, but until I have enough, let's say the highest dividend rate, maybe about 8% that I've seen from like, is that Johnson & Johnson, I think, or Coke? One of these big companies have like 8% dividend yield return rate, which is pretty good. But until I have £100,000 to put into that to be seeing like 8 grand returns a year, it's not really worth doing it, is it? It's not really worth doing it. So I'm going to put more money into stocks, into like more growth stocks in the future, and probably sell off on all of these and then redistribute that, which is interesting because these are actually big winners at the moment. Like 13% for the low volatility stock is actually pretty volatile. But yeah, I mean, we'll see how things go. Hopefully if this stabilizes, or normalizes, corrects, reaches support level, whatever lingo you want to use. If it stabilizes, then I'll sell off. But for now it's going up and everything else is going down, so I'll keep it. But yeah, interesting times. Oh, the S&P 500 one's not doing too well this week. But if I go to the long shot, it's doing pretty well over the course of the last year. Anyway, I'm going off on a tangent. But yeah, that's my entire stock portfolio, essentially. I didn't talk about the 2 pies that I have here, the Do or Die Freshers Fund or the Undergraduate Survival Fund. Both of these I opened a week ago. But I have talked about these 2 at length in the previous video. So check that one out if you do want to know more about this. As I said at the end of that video, I'm going to say it again now. If you do want to see me do more of like a fundamental analysis, talking more about my actual investments and my thinking behind them, let me know down below in the comments. I'll get that done. I'm by no means a financial advisor. I don't actually know what I'm doing. This is all for entertainment purposes. But even beyond that, these investments are just I'm doing it for me. I don't expect anything. I'm just doing it for me. So if you guys do decide to buy into anything that I say, don't don't do it without your own research, without speaking to a financial advisor, and understanding your own risk tolerances and etc. But other than that, that's all from me. So hope you guys have enjoyed it. We will get back to some internship content soon instead of just like non-stop opinion corner and finances. But yeah, I do what I want to do around here. So yeah, enjoy and see you next time. Peace.